Hi everyone, welcome back into XLpips YouTube channel. So if you are new into this YouTube channel, please click that subscribe button. And if this video will be helpful to you, don't forget to like, comment, and share this video so that many people may watch it and learn from this video. Today's session is going to be about how we can actually analyze using the top-down analysis, or what we call the multiple time frame analysis, the power of using more than one time frame or more than two time frames. Okay, so here we're just going to start from the higher time frame, and then we're going to check the medium time frame, and then we're going to execute on the lower time frame. Okay, so if you are somebody who watches a lot of contents on the social media, it may be Instagram or Twitter, which is now called X, or if you are watching several videos on YouTube here, I know you have come across contents talking about CRT, the candle range theory, okay? And that's one of the very simple, I can say, strategy that you can analyze the market. And I know most of us, we always like to actually analyze or do things which are very simple. We don't like to actually trade strategies that are very complicated, and that's true. Okay, we need simple strategies because we are just trading. We are in the game of probability. Okay, but what I'm trying to talk about here is that don't just approach CRT with the idea that every candle is a range. Okay, don't approach trading with the belief that CRT is going to change your life. It is not CRT. It's your mindset. Is your motivation, your daily consistency, working hard, back testing, journaling your trades, and actually forward testing. Okay, it is not just about learning a strategy. You know, every day, a lot of content creators and traders are posting threads and videos, and I can say PDFs about CRT, and everybody is trying to actually talk about something which is maybe missing in that CRT strategy, or in any strategy. They're just trying to tell you, like, this is what you are missing, this is what will make you profitable, this is what will make you a funded trader. But the reality is, if you want to be a profitable trader, you need to work on yourself. You need to practice more. Okay, because practice makes perfect. If you keep on practicing, there you are gaining the experience, and then you can become a profitable trader. So here I'm going to analyze using the idea of one of my videos. I explained about the daily candle masterclass, and I've showed you, like, there are different ways where you can actually analyze the higher time frame. So this is the weekly time frame. As you can see, we're in the weekly time frame here, and if you look closely at what price is doing right now, here we have this we had this, you see, some form of CRT. Okay, CRT traders, they know this is, I think this is a CRT. Okay, this one, let me highlight this one. Okay, and mark that to see that's the CRT, like, price created this manipulation there. And if you look behind here, we have this key level. Okay, price is just bouncing on that. You see that fair value gap, okay, on the weekly time frame. So if you are somebody who actually still learning CRT, maybe you just thought like CRT is going to be easy like this, because we have this turtle soup here, and you can clearly see we have the fair value gap there. So price is reacting from this fair value gap, so we can expect more drop, or like we can expect price to go lower. Okay, but the issue is the next candle didn't respect this. They didn't follow our strategy. We didn't follow the CRT strategy. Okay, which is very normal, because not every candle will act as a range. Okay, not every candle will act as a range. Why? Because you can also see even down here, we had the CRT. Okay, we had the CRT also. So this was already confusing. So you are a trader who cannot actually have the clear direction bias just depending on these two candles. You cannot use these two candles. Okay, you cannot use these two candles to know the direction bias, and you cannot just use this fair value gap here to know the direction bias. Okay, you need more than that. You need more than that. So what do you need here? You need to actually have the understanding of internal range liquidity. and external range liquidity, okay, which is something that I have talked about in my daily candle masterclass video, and you can watch it. You will see the power of external range liquidity and internal range liquidity. So the internal range liquidity is this fair value gap. So this fair value gap is an internal range liquidity. So this fair value gap is an internal range liquidity, but also remember we have this fair value gap down here again, which is also an internal range liquidity. So what we know is that price will tend to move from internal range liquidity to external range liquidity, and also from external range liquidity to internal range liquidity, okay? So that's what you need to understand first. So what happened here, why did this CRT fail? Is because we had a double purge here. Price sweeping the buy side liquidity, price taking the sell side liquidity of this previous day candle, okay? And this was what was formed, and it happened to this fair value gap. So right now what happened is the next candle is a bullish candle, and what happened is this candle entered into this internal range liquidity, okay? Yeah, this internal range liquidity, very nice internal range liquidity. Price, you can say price filled this fair value gap, but at the same time price just mitigated this. This is the weekly, okay, the weekly fair value gap, not daily. So this weekly fair value gap was filled, and also price tapped into this weekly bullish order block, okay? So now we have this. That's why we expect price to move from this internal range liquidity, which is this weekly fair value gap, to this external range liquidity. You can be that, or you can use this as your next drawn liquidity, or as your external range liquidity. You understand? So this fair value gap here is our internal range liquidity, and this high, the high of this candle is our external range liquidity. Even this one is also the external range liquidity. Even this one is also the external range liquidity. Let me show you even this point. Yeah, that point, okay? Even this point here is the external range liquidity. So we are moving from the internal range liquidity, moving to the external range liquidity, and that's the weekly time frame. But we need to check the daily also in order to confirm the trend, okay? We need to confirm the trend before we can continue checking for entries, okay? We need to confirm the direction bias, so we need to check the daily also, okay? So let's check the daily and see if we can find the same direction bias, okay? Okay, let's see. So here we can see. So here on the daily, we have this daily fair value gap there, okay? And also, remove this. And also you can see price has already started to create this bullish candle there. And above this bullish candle, what do we see? We see this volume imbalance. We have this volume imbalance there. Price is going to actually move to fill this volume imbalance. And above the volume imbalance, we also have this fair value gap, okay? We expect price to fill that fair value gap. So here I'm expecting more bullish moves, okay? Why? Because we are reacting on this internal range liquidity, expecting price to fill this other internal range liquidities, or we may even target this high, or the high of the previous of this candle, of this daily candle, or we may target this, okay, that point as our target. So now let's check on the 4 hours. So already now on the daily and the weekly, we are still bullish. So we know the trend is bullish. You see how simple it is. And remember, we didn't actually follow the idea of CRT when we are actually analyzing the higher time frame. Why? Because not every CRT will work, and because even CRT is just something simple. It just works on, it works depending on the internal range liquidity and the external range liquidity's idea, okay? And also we need to be very careful when we are analyzing, because not only we focus on the turtle soups that are created by the CRT model that people trade, but we also need to know that price will react depending on the ways that the price action is, okay? You have to look very careful on the price action, because I showed you, like on the weekly, we had a CRT, but CRT didn't work because we had the double punch. At the same time, price had to enter inside the daily fair value gap, the weekly fair value gap, okay? You see, we had a weekly fair value gap that was respected, okay? So you need to know that. So you cannot just trade depending on a single thing, like depending on just the turtle soup, okay? You need to be very careful reading the price action, reading the candles formations, okay? So you can see here, as I said, we had this weekly fair value gap that was still unmitigated, and price was just creating some form of accumulation here. Okay, like price accumulated from here. See, there was this sort of accumulation there. So it was not something that you can actually expect price to do it. You cannot just expect price to keep going lower when you know first we had this price action. You can see we had this bullishness here. Price was bullish for a long time. Okay, price was bullish for a long time. You cannot just expect price to start reversing. You see, we were bullish from down there. Okay, we are bullish, and we created these fair value gaps here. This fair value gap is the one that was filled and price became bullish. So we expect price to keep on going higher. Okay, the same thing on the daily. We had a reaction, a very good reaction on the daily fair value gap. Okay, the daily fair value gap reacted very nicely. We had a very good opportunity for us to. It was a good opportunity for us to continue going high. And now this is the 4 hour. In the 4 hour, we are going to focus on what? We're going to focus on buys. If you look on the 4 hour time frame, price is creating another turtle soup here. You see, another turtle soup there, and also reaction from this what? From this 4 hour value gap. So don't be somebody who will get confused when you try to focus much more on CRT and you forget on reading price action. You need to be very careful. Understand the power of direction bias, and direction bias is not going to be created by your CRT strategy. Okay, CRT does not give you the direction bias, just gives you the confirmation of the bias. Okay, it doesn't show you the direction bias, just show you the confirmation of the bias. Okay, and that's why even here we had a CRT, but this CRT is not going to work. Why? Because the direction bias is bullish from the weekly and from the daily. So right now, what you're supposed to do is to keep on following your direction bias. So we are not going to focus on this CRT because this is not our, it's not our target. This is not what we are going to focus on because it is showing us like there's going to be a sell. If there's going to be a sell, then you're going to trade against the trend. That's very bad. Okay, so let's check the 4 hour, the 1 hour time frame now to see if we can find any entry, right? So this is the hourly time frame. You can see here, price created this, reacted from this. Okay, price reacted from this bullish order block down here on the discount level. Okay, we had this bullish order block there. We had this mitigation. So, and you can see even before we created this, bullish order block, we had that turtle soup. Okay, very nice, a very nice reason for us to expect to reverse. So when we see this kind of liquidity sweep there in form of turtle soup or sell side liquidity, that gives us more confirmation that the trend is going to change. And you can see it was a very nice market structure shift there. Okay, yeah, that was a market structure shift there, and price went, and then we had this move to the downside, tap into this bullish order block, and right now we are here. So what do you see here? Simply, there is the trend is bullish now, and what I see here is this trend line. This is this trend line. Very, 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 very bad. Okay, this is a sign that you cannot just execute easily there. And then we have these equal highs there. So the equal high has been taken. Okay, price took that equal highs. But remember, we are bullish. Okay, we had market structure shift here, so we are bullish. So now, right now, what we are waiting for is to see the break of structure, the true break of structure there. I'm waiting to see some sort of true break of structure there. Okay, right there. I'm waiting for a break of structure from this high. That high needs to be broken. And I'm going to use this as my entry point because I know this trend may be taken. And most of the time, price takes a trend like that. We always tend to see this kind of thing, like price takes the trend at a certain percentage and then it goes high. Okay. So I'm expecting something like that. Okay. So let's see. Let's see what we get from there. If we take this trend line before break of structure, then we are going to look for a trade there. But now we can see price is approaching that level where I've marked as my break of structure point. Now, yes, we have the break of structure. Now we have the true break of structure there. That's the true break of structure right now. So I'm not going to use this as my entry point. I'm not going to use that order block. I'm not going to use this order block. Never, should never use this kind of order block. Why? Because yeah, there is a trend line. Why are you going to use something that has a trend line? You don't have to use this. This order block is going to be your inducement level. Okay, this order block is going to be your inducement level. I mean this is going to be your inducement level. Don't buy on this order block because there is liquidity below it. There is liquidity below it. This trend line is the sign that it's the liquidity. So I'm expecting price, as you can see, we expected this first order block. Now this is the second order block. Okay, why? Because there is no any break of structure here, because this was just creation of liquidities. So this order block is still clean because we have no true block of structure there. We had true block of structure here, but we cannot use this because this is where the initial block of structure started. But you're not going to use this order block because below it there is a trend line. So you're not going to use this because this is a trap. Okay. So you're going to use what? You're going to use this order block. This is our order block, the one that's the correct order block that you're going to use. So I'm going to actually wait for price there. Let's see if price comes down. I'm going to put my stop loss below this legend there, and my target. There we have them for some sort of equal highs. You see, that's my target, and this is 1 to 3 risk to reward ratio. Okay. So let's see if price respect that order block. We never know. Let's see how price go down. Yes, there we are. We are already in. So price is there. So right, you see. So this order block, the one that I said is an inducement, became a true inducement for it. So you see, that's an inducement there. We didn't have our true order block here. We had our true order block down here, and it has already been mitigated. Now let's see if price switches or hits our stop, our take profit. Okay, it's either we go higher or lower, but here I'm expecting price to go higher. Why? Because the daily and the weekly direction bias is bullish. Okay, so let's see if we go there. There we are. TP hit. That's what a profit hit. You can even target this. Okay, because you know the buyer is bullish. You are very confident that the buyer is bullish. Even there, okay, you can even target that. I believe it will reach there. Okay, why? Because the buyer is strongly bullish. Right there we have. That's our TP. Okay, TP hit. So guys, that's how you analyze. So thank you for your time, and I hope this video is educational. And if you like this video, don't forget to like, comment, share, and if you are not yet subscribed into this YouTube channel, please click that subscribe button so that you may become one of the first people to watch my videos when I drop them. Thank you guys, and be blessed.